Hello and welcome to today's video on the Chinese yuan. China ended 2025 with a strong export momentum as December exports rose by 6.6% year on year and imports increased by 5.7%, lifting the annual trade surplus to a record $1.2 trillion and reinforcing external demand as a key growth stabilizer amid weak domestic consumption. Trade with the US deteriorated sharply due to tariff tensions, with December exports and imports down 30% and 29% year on year, while for full year 2025, exports for the US fell 20% and imports declined 14.6%. This weakness was offset by diversification towards non-US markets, with exports to the EU and ASEAN rising 12% and 11% respectively. Although the widening surplus has raised concerns among trading partners, the IMF has urged China to rebalance growth towards domestic consumption, while the World Bank upgraded its 2026 growth forecast to 4.4%, citing expected fiscal support and resilient exports, that is improving investment sentiment. Now coming to the surplus and the structural imbalance, the expanding surplus highlights China's manufacturing strength but also exposes persistent domestic fragility. A prolonged property downturn, subdued household demand, and flat full-year CPI kept imports in check. Although December CPI rose to 0.8% year-on-year, signaling that deflationary pressures may have bottomed out, inflation remains well below comfort levels. This dynamic reduces the urgency for aggressive near-term stimulus and reinforces reliance on exports. The offshore yuan has stabilized near 6.9650 per dollar, underpinned by strong trade flows and improving investor sentiment, after breaking below the 7 level. However, the PBOC's weaker than expected midpoint fixings indicate a clear intent to curb excessive appreciation. Policymakers remain cautious that a rapid strengthening of the currency could undermine export competitiveness and reintroduce deflationary pressures. Now coming to the technical analysis. On the daily chart, the bearishness in the pair can be confirmed by the downward moving yellow trend line connecting the series of lower high of the pair. Market focus is shifting to the 6.9450 levels, identified as a critical support level. A sustained break below this threshold could trigger stop-loss settlements and accelerate yuan appreciation, and the pair may test 6.8131 levels. Failure to do so would reinforce controlled range-bound currency regime. Now, finally, looking into 2026, the yuan is likely to strengthen gradually, supported by export resilience, easing deflation risk, and firmer investor confidence. However, weak domestic demand, geopolitical risk, and policy preferences for stability argue against a sharp move. So, CNY trades within a 6.8 to 7.1 range, with appreciation occurring slowly and under tight policy oversight. So, CNY importers should remain extremely vigilant and should maintain 20 to 25% hedge ratio at any given time, and should capitalize on the dips, as the CNY INR pair can be seen in a continuous uptrend. Remaining at zero hedge isn't advisable. That's all for this video on the Chinese yuan. Thank you for watching.